Good morning, ladies and gentlemen, and welcome to the Capacit'e Infraprojects Q3 FY22 earnings conference call, hosted by Yes Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Viral Shah from Yes Securities. Thank you, and over to you, sir.
Thank you, Imba. Good morning, everyone. I welcome all the participants to the 3Q FY22 results conference call of Capacit'e Infraprojects Limited. We have with us Mr. Rohit Katyal, Executive Director and CFO of the company, Mr. Alok Malhotra, who is the President and Corporate Finance, Mr. Nishit Pujari, who is the Head of Accounts. We would commence the call with the opening remarks from Mr. Katyal to give an overview on the company's performance. This will be followed by a Q&A. Before we begin the call, I would like to mention that some of the statements related to today's conference may be forward-looking in nature. I would now request Mr. Katyal to begin with his opening remarks. Over to you, sir. Thank you.
Thank you very much. Good morning, everyone. We would like to extend a warm welcome to our Q3 FY22 call. I hope you and your loved ones are doing well. Along with me, I have Mr. Alok Malhotra, Mr. Nishit Pujari, and SGA, our investor relations team. I hope everyone has had an opportunity to review our results. The presentation and press release have been posted on the stock exchanges and our company's website. Before I take you through the operational and financial performance, I would like to highlight a few points. The construction industry as a whole has seen substantial growth in Q3 FY22. The BDD Chawl project at Worli, in integrated JV with Tata Projects Limited, has begun to show signs of progress. We are working to increase the execution space. Total billing done at SPV level till December 21 was 127 crores. Share of Capacit'e Infraprojects being 44.45 crores, which could not be recognized in the standalone or financial statements of the company. CIDCO projects, the sites handed over by the client have been fully mobilized along with equipment, and we expect increased execution in the current and ensuing quarters. Work was suspended at Vashi Truck Terminal due to flamingo birds issue, as there was an old government resolution prohibiting work within 10 kilometers radius of flamingo habitat. Subsequently, the same was changed to 5-kilometer radius, and therefore the work could restart in January 22. The impact of this temporary suspension on the revenue was rupees 40 crores in Q3. I am pleased to inform that we have received a repeat order for civil works from Raymond's worth 231.5 crores from a premium project at Raymond Thane. Order inflows to date stood at 660 crores in the current year. The company is in advanced stages of negotiation in orders worth 1859 crores and therefore expects to close the current year with fresh order inflows or additions of 2,400 crores or thereabouts. Our credit rating has also been reinstated to investment grade to BBB stable by India Ratings. Now allow me to give you an overview on our operational performance during the quarter. The overall order book, public and private, excluding MADA, stood at 8,473 crores as on 31st December 2021. At the end of December 21, our order book from the public sector was 38%, while the order book from public sector was 62%, and while the order book from private sector accounted for 38% of the order book. Work is progressing at good pace on all fronts. In the third quarter of FY22, the company collected cash of rupees 301 crores, suggesting stable collection efficiency. Similarly, the collection for the first 9 months of the current financial year stood at 874 crores. The pace of execution is projected to pick up. Working capital cycle, excluding retention, improved from 160 days in March 2021 to 99 days in December 2021, indicating positive trends. Our business model has clearly benefited from our ongoing focus on client service and cash flow management. Our standalone financial performance for Q3 FY22 is as follows. Total income for Q3 FY22 is rupees 370.6 crores as compared to 347.4 crores in Q2 FY22 and 311.1 crores in Q3 FY21. EBITDA for Q3 FY22 is 62.3 crores compared to 59.9 crores in Q3 FY21, up by 3% year-on-year. EBITDA margins in Q3 FY22 were at 16.8%. PAT for Q3 FY22 stood at 12.8 crores. Cash PAT for the same period stood at 40.1 crores. The gross debt was stable at 274 crores and net debt at 88.2 crores as compared to 89.3 crores in Q2 FY22 with net debt equity ratio at the end of 31st December 2021 being 0.09x. With this, I now leave the floor open for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Faisal Hawa from AG Hawa and Company. Please go ahead.
Sir, any part of the MHADA design element, which we had gained, is reflecting in the profit and loss for the Q3. We had said that there is a lot of design element that is there, and that will result in exceptional gains in one of these quarters.
So that first bill of 53.3 crores plus price variation has been submitted. We expect the payment in this week and for the price variation in 14 days. So yes, there will be booking of design and engineering charges for the partial rehab portion in quarter 4 of the current fiscal. I hope that answers your question.
You mean to say Jan to March, we will have a gain of almost 53 crores, which will almost go to the bottom line?
The SPV level, which is Tata Projects and Capacit'e Infraprojects, is following an input method, whereas Capacit'e Infra follows the output method of accountancy. So, as per the input method and Ind AS followed by Tata Projects, they do not recognize profit till 10% of the contract is over, and therefore there will be subcontracts placed on Capacit'e Infra and Tata Projects proportionate to their shareholding pattern, which is 65 and 35 respectively, so that we can raise our bills and recognize revenue and the bottom line at the same time. So yes, you will see some profit, not windfall profit, but profit in quarter 4 as far as Capacit'e Infra is concerned. However, you will see substantial profit accruing in the next financial year as the total engineering and design portion is close to 320 crores in this project. I would like to add that we have started work on 3 buildings. The homework is already at the project site, and therefore you will see billing of close to 180 crores at the SPV level up till the end of this fiscal, and close to 600 crores in the next fiscal.
Okay.
Before we take our next question, we'd like to remind participants to ask a question. You may enter star and 1. Our next question is from the line of Dhananjay Mishra from Sunidhi Securities and Finance. Please go ahead.
Yeah, good morning, sir. This 1859 crore order, which is in advanced stage, so could you explain the nature of these orders in terms of developer orders or government orders?
So out of this 650 crores is an order from an international client who has had a joint venture with a local strong player, and the balance two are from public sector clients. So approximately 1,200 crores coming from public sector and the remainder coming from private sector.
Also, in terms of execution, even if I include 40 crore, you would have lost because of suspension at Vashi work. Then also we are reaching at about 400 crore, but we had been given the indication that we will reach about 500 crores quarterly run rate. So why we are lacking in terms of execution on overall basis? We are not reaching the 500 crore mark.
I would like to clarify that I had given a 500 crore figure for Q4, 550 crore and not 500 crore. However, you are right. There have been unexpected stoppages at the work, which could not have been foreseen when I was discussing with you the last time. The company is well seized of the matter, and all efforts are being taken to ramp up the execution, which already has been ramped up. We are having more than 16,000 feet at the site level in terms of labor. We have 1,500 engineering staff at various project sites. So you can be rest assured that you will only see positive as far as revenues are concerned here on as we get into the next financial year, which will be a high growth year. We don't expect any surprises on COVID front. We believe COVID is behind us. The third wave was only a scare, and it did not honestly impact any reverse migration of labor. So you are right that there has been a shortfall in execution. We admit to that. However, necessary steps have already been taken, and you will see the ramp up here on over the next quarters, and quarter on quarter, the growth will be substantial.
So this 550 crore revenue, there should not be major variation in Q4, right? You will reach there.
I just told you that this was when we spoke last time. If you can send your email ID to either Amit or to SGA, you will receive a detailed note on the revenue for Q4 and for the next financial year.
Okay. And lastly, sir, what is the share in Q3 from CIDCO, and what will be the share in Q4?
Sorry?
CIDCO revenue share from Q3.
CIDCO revenue share was only 37 crores. It was supposed to be above 90 crores. I just mentioned that we have lost 40 crores due to the suspension of work at Vashi Truck Terminal. That work has already started from 12th of January, and we don't expect any stoppages at any of the 6 locations which have been handed over and under execution.
So Q4 will cross 100 crores. Okay.
We are on that. However, project-wise revenue of the first top 5-6 projects can be informed once you just drop a mail, and that will be informed to you.
Okay, sir.
Thank you.
Thank you. Our next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. So my first question is whether our MADA execution has started, and what will the MADA revenues for Q4 and FY23?
Yes, MADA execution has started. We have started execution of 3 buildings. The piling work of 2 buildings has been completed. The aluminium foam work for monolithic casting is already at the project site. And from the revenue perspective, at the SPV level, I repeat, at the SPV level, we have already recognized revenue of 127 crore. We should be in a position to recognize revenue of close to 200 crores in the current fiscal, 180 to 200 crores. In the next financial year, we should be confident of achieving revenue at the SPV level of 600 crores. Our Capacit'e share is 35%, which it should be in a position to recognize from next financial year. I would like to clarify, we will not be able to recognize any revenue from MADA project, even though the share is 35%, in the current financial year because of the Ind AS accounting norms.
Okay, so this revenue will be recognized from next year, you are saying, right?
Yes.
Okay. Okay, got it. Okay, and my second question is, sir, if you could provide any revenue and EBITDA margin guidance for FY23?
The order book is available. However, the budgets are still being worked out. We will be in a position to give you the exact revenue figures, but it should be historic high that the company has ever achieved, close to 10th of March, and not immediately, because project-wise plan is still under progress for the next financial year. Once the board approves the budget, we shall inform you immediately.
Okay, no problem, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Priyanka Singh from Atidan Securities. Please go ahead.
Yeah, hi, sir. Good morning. So firstly, how much have we planned for this year in terms of capex, and how much have we spent on a 9-month basis?
The total additions in the first 9 months has been in core assets 33.49 crores. We should be adding another 20 crores. So your current fiscal should close to 53.5 to 54 crores as far as capex is concerned. For the next financial year, the capex plan also again would be close to 50 to 55 crores. So you will see a dip in the capex of approximately 30 years on back of increasing revenues.
Okay. And what are our plans in terms of becoming a debt-free company?
So our net debt still stands at 88 crores. Cash flows are strong at the moment in time. We do continue with our vision to be debt-free by September of 2023. All efforts are going on. And as I had informed last time, that to be debt-free, it will be on basis of 2 accounts. Reduction in margins towards bank guarantees and LCs will stand at 189 crores as on today, including accrued interest. The margins, if they come down to 5%, will release more than 120 crores of margin money, which will only be used to reduce the debt level. And similarly, we expect that over the next 20 months, 18 months, 140 crores of free cash will be available in the company to take care of the balance debt. Having said that, we clarified in the last quarter also, there could be a temporary increase in debt in a particular quarter to ramp up the operations, which should not be forgotten. However, the vision to be debt-free is maintained at September 23. We shall continuously update you on quarter basis.
That was really helpful. Thank you.
Thank you. Our next question is from the line of Khushbu Gandhi from Yes Securities. Please go ahead.
Hello.
Yeah, hi.
Hi, sir. Thank you for responding me. So I have 2 questions. One is about how is the tender pipeline looking for FY23, and what is the impact of raw material prices, the rise which have happened in raw materials? So what is the impact on our project? Are we having any impact on our EBITDA margins going forward?
Yeah, good question. First, I will take your question on the pipeline of projects for FY23. Extremely strong from both government and private sector. Private sector big pipelines have opened big time from December of last calendar year, and we believe that there is a serious good look ahead as far as both fresh orders from reputed clients and repeat orders from existing clients is concerned, as far as the private sector is concerned. Government also in the budget 48,000 crores has been allotted for PMAY projects, which is low cost affordable housing projects and all these projects now are invited on EPC basis. So Capacit'e will also be vying for its share. Hospital pipeline continues to be strong both at the center and the state level. Therefore, all in all, the big pipeline for the next financial year, answering your question, is quite robust, and we don't see it changing for the bad or on the negative side, as the budgetary allowances and allocations have already been done. Second question was on the price variation on raw material. We have clarified earlier that all our projects have price variation clauses. In private sector, price variation is full pass-through, and government price variation for CIDCO and MADA is full pass-through. Balance fuel is covered under the relevant indices published by the Office of Economic Advisors. So answering your question, we do not see any impact of increase of commodity prices on our order book. Maybe in one quarter you may see 1.5% increase in the cost of material consumption, but if you compare this over the last 4 years, our cost of consumption has been quite stable. And that 1.5% also or 2% increase in a particular quarter can be only attributed to price variation having been billed maybe at indices of 1 quarter earlier. So I don't foresee any impact on our overall EBITDA for the full financial year due to any price increase for the reasons already explained. Thank you.
So one more question. You said that order pipeline seems good for you for FY23. Any approx number you can just give us as a guidance, how much we'll be expecting or how much we have already bidded in FY23?
No, FY23 we have not bid anything. We have bid in FY22.
No.
And as I explained that we are in close discussions to receive orders worth 1,859 crores. Addition of 1,859 crores will take the order book back to close to 10,000 crores. You can reduce the revenue of Q4 from that, and therefore the order bid backlog in its own will be substantially strong. However, taking into consideration the internal targets for the next financial year's revenue, the order inflow has been pegged at 3,000 crores. Generally for this year also we had said 2,000 crores, but we should be doing better than that. So it's for next year 3,000 crores, and we wish to maintain an order backlog of close to 10,000 crores or thereabouts, excluding MADA project.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hi, Rohit. Just two questions. So one is, sir, we are ramping up our execution given the strong order book. So we need to have cash flows on our side. We just wanted to pick your brains, first of all, on your liability side. So one is that, on the collection side. So on the stock receivables, which have been quite dated, some of the painful accounts like Radial and some other accounts. With CIDCO also, I understand last quarter you mentioned about 100 crores is still pending to be collected. So from the collections, what's the progress? How do you expect releases to happen from there? Secondly, you mentioned that there could be spike in debt in some of the quarters, near quarters, because of the execution ramping up. So just wanted to understand from the liability side, how are the bank guarantee limits, how are the fund and non-fund based limits getting ramped up, so that we can get some release in funding from there. So if you can connect these two things, both on the asset and the liability side, it will be better to understand the execution ramp up.
Yeah, just a minute. I'll just try to understand your question. First question is? Collection. Second question is your status on the payments held up with Radius and other people. Third is the ramp up of bigger projects and the tie-up of banking limits. Am I right?
Yeah, so basically I wanted to connect the liability and asset side in terms of like how the stock payments and receivables are getting recovered over the next few quarters. Secondly, on the banking side, how are you securing fund and non-fund based limits so that you can ramp up the growth and execution given the strong order book which we have. So just want to connect the two things.
So we should have by this month end about 100 crores tie-up and release to take care of our incremental working capital. This money will be parked in our CC accounts and utilized for ramp up of execution. Apart from this, State Bank of India, Indian Bank and Union Bank of India have committed additional exposure of 70, 70 and 85 crores each. With this, the financial tie-up will be completed latest by March and April 15th. This is point number one. Point number two, answering your question, before February end, the company shall have enough cash availability to ramp up the projects to the desired level, A. B is on the collection side. We have been historically collecting close to 80 to 85% of our revenues certified, and we believe that at least for first over the quarter 4 and the quarter 1 of the next financial year, this will continue. We have seen realization of old receivables which were in form of cost compensation from Vadwa, from Purvankara, and receivable of old monies to the tune of 10 crores in the current financial year from Kalpatru. Radius exposure, we have not received any money as yet, but I would like to update that their Chembur project is in advanced stages of negotiation with a buyer to whom NOC has been given by HDFC Limited, the NBFC arm of HDFC Limited, and therefore we are very hopeful that some money from this group will be realized between March and April. Having said so, our total ECL provision stands at 72 crores as on 31st December 21, which is substantial enough to take care of any shock absorber in case our assessment of realization takes hit from time perspective. Having said so, we do not expect any bad debts, and we are only carrying it in the provision side. So that answers your second question as far as cash flows are concerned. What was the third question, please?
No, I think those were two questions. The third one I'm going to ask now. So you're saying that 75 to 80 crores each will be a financial tie-up with SBI, Indian Bank and UBI. So it should be about 240 crores?
Yes. 240 crores.
So what is the fund? So actually increase our fund-based limit by 240 crores?
No, fund-based limit is not required 240 crores. Fund-based limit is only 70 crore requirement. All right? So that we don't require anything more than that. Balance is non-fund-based limits, and non-fund-based limits will be utilized to get realization of retentions. So out of the total 159 crore retentions, 90 crore is due and payable to us immediately. So the efforts are on to issue the bank guarantees in March partially and in April to get this 79 to 80 crores realized by end of quarter 1. Subsequent to that, you do not require any fund-based limits. Maybe you will have substantial portion of fund-based limits unutilized in the system.
You're saying you will be using these 240 crores of limits, non-fund-based limits, we should be able to realize 90 crores of retention money this time.
Absolutely, because out of 240 crores, even if I consider 70 crores as fund-based limits, balance available, because all the projects in private sector now performance guarantee is not required. In the government, performance guarantees have come down to 2 to 2.5%. Therefore, the overall guarantee requirement is down. So substantial portion of this monies will be utilized, these guarantees will be utilized for taking back our retentions, which is held with the clients, which I just mentioned to you, is approximately 90 crores is due and receivable, and we are hopeful of collecting about 80 crores out of this.
Okay. And second part of that question was on the bank guarantee side. You said that you're looking to reduce your cash margins on bank guarantee to 5%, which could release about, out of 180 crores, there could be substantial release there also. So I think 120 crores you said will get additionally released, right? So what are the workings there? I mean, will the bank be able to reduce your cash margin limits from 25%, not to 5%? So, and how long this journey will take to reduce it? Because that's a big negative, I mean, for companies which are younger like your company. So, because other companies have those kind of limits, but that's a huge disadvantage we had.
So, our guarantee in the consortium is at 10% margin. Project-specific guarantees are at 15% margin. Some of our fixed deposits are held up against term loans, which will get cleared over the next 6 months' time. So it is not only margins, it is also the term loan repayment. For example, in HDFC Bank, we have 19.5 or 20 crores of fixed deposit, and the total outstanding in term loan is only 10 crores. So we believe that term loan will get over the next 6 to 7 months period, and these margins or fixed deposits will get released into the working capital system. So when I said 120 crore, I am taking a ballpark figure. So in the consortium, it is not a reduction of 10%, it is a reduction of 5%. In project specific, it is a reduction of 10%. Now, having said so, the company is in a practice of collecting back advance guarantees on a quarterly basis. So answering your question, will the banks be agreeable? The banks will be agreeable to reduce this margin only after we have reinstated our rating to A. And therefore, I gave you a timeline that by September of 2023, we believe that on release of these 100 crores, we will be approaching the rating agencies again, because their only concern was we didn't have the banking lines to have enough adequate liquidity, though we have provided 2 months of repayment in DISRA. So, on release of this 100 crores, there will be more than sufficient liquidity in the system for the rating agencies to reconsider their stance of not giving us the A rating and going back to BBB. So this is what is the clarification as far as reduction of debt and how that will pan out.
So both put together, so 120 crores on the bank guarantee and about 90 crores you said on account of the retention money. So roughly over the next 15 to 24 months, you will have about 200 crores of releases happening.
Yeah, that's right.
The 90 crores will happen much earlier. So 90 crores you are expecting by when? You said it's immediately due.
Please, just listen me out. 62 crores is the term loan outstanding, out of which majority gets paid over the next 18 to 20 months. So that's a self-liquidating loan which is available, which is on the books, which has some current maturity and some has long-term maturity. All right?
Yeah.
Number two, on the front of working capital, whether as working capital demand loan or cash credit limit, that today, as on date, is 120 crore. Please note that the promoters have given 55 crores or thereabouts as long-term loan of 18 months, and if need be, they will extend this loan and are not drawing any interest to improve the liquidity of the company. So when you reduce that 55 crores from the overall debt of 280 crores, the debt will come down to 225 crores. Out of this, you just calculated 200 crores. However, you have to take into account the repayment of term loans, which will happen over the next 18 months.
Yeah. But this 90 crores, sir, which is on the immediately due retention, so that will happen within 2-3 months?
So, we are expecting that to happen in the Q1 of next fiscal. All right, and therefore that releases a substantial amount on the long-term working capital of the company. It reduces the total outstanding with the clients by equivalent amount. Therefore, the debtor days fall substantially. All right. Number three, this debtor levels falling will have impact on the creditor level falling. So the balance sheet, in my view, will be much lighter in FY22-23.
Just lastly on the CITCO project, sir, we had about 125 crores of pending mobilization advance to be taken up. So just wanted to understand from you, have we taken all the sites now and the entire order book is now with us for execution? And if yes, then when do you intend to take up that balance mobilization advance on that?
No. We have not got the location 7, so has not got, Shirki hasn't got it, Shapurji hasn't got it. Once the last location is made available, only then we will be claiming for the last tranche of 127 crores. That's one part of it. However, the revenues for the next fiscal are being drawn out on the availability of the current locations, which is in excess of 2,500 crores. And I will tell Amit to share the details with you. Project-wise, All right. It also needs to be remembered that as far as Oberoi is concerned, we requested and the client agreed to remove the steel and concrete supply as free issue. And similar efforts have been taken with all the clients because the commodity prices have actually doubled over the last 2 years. So what 3.6 crores LC was required for procuring 1,000 tons material, today 7.2 crores is required to procure that quantity. And that is only resulting in margins getting held up, working capital getting held up. So these efforts which have been taken, I believe that they will yield much higher results. For example, in January, in pure labor, without value of steel and concrete, we have billed 14 crores on Oberoi. If you take the value of steel and concrete, at the current price levels, it would have been close to 38, 39 crores. So that's the billing which we are doing per site. And as I told you, I will request Amit to send you the details project-wise for the next 15 months as far as the execution is concerned, as it will be easier for you to monitor.
Besides this debt, I mean, we are self-sufficient to ramp up execution, so we don't require any external equity. So company as such is, so the liquidity seems to be like a little bit of like tying up of limits and all, should sort it out. But in the interim, we don't require, I mean, there is no as such big stress here to raise external equity to ramp up execution.
I just clarified that you should not treat the promoter debt as debt. It's basically a quasi equity. All right, number one. Number two, and more importantly, the question of giving away equity at this level is ruled out. All right. Number three, I mentioned that 100 crores tie-up will be completed this month. The day it is disbursed, you will get a message from me so that this question doesn't come up in the next quarter.
Mr. Concall,
sure.
There are several participants waiting.
Sure. Sorry.
Thank you. Ladies and gentlemen, may we please request you to limit your questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up question. We'll take our next question from the line of Faisal Hawa from AG Hawa and Company. Please go ahead.
There are so many developers now, announcing new projects, and they are also expecting that the current inventory will get sold out. And there are so many tie-ups taking place for land and for joint ventures and all. So how are these topmost developers like Prestige or even, for example, Godrej, sounding you out on future projects, and are they, asking you to be ready for a glut of new construction sites to be given?
Mr. Hawa, your voice is not clear. If you can just repeat the question a bit slowly.
So, sir, we are seeing a glut of new projects and new developments being announced by Prestige, by Godrej, and a lot of old developers who had land or who had SRA some permissions taken. So we can probably see a huge glut of new projects coming up once these old inventories are actually absorbed. So how are these developers actually sounding you out on new projects?
You have just seen that Raymond started with a 300 crore order, went to 400, 500, now it is 800 crores. That land parcel on its own has an order opportunity of 2,000 crores for us. Until the time the client feels that Capacit'e is doing the job to their satisfaction, which so far they feel, we have a good opportunity. Similarly, we see that clients like Oberoi will start developing maybe their Thana project in the coming months. So opportunity to a large extent exists with our current clients. Like, for example, Phoenix and Canadian Pension Fund, who are developing the Pune Mall, Phoenix City Mall, which we are executing, will be constructing 2 commercial buildings on top of the mall. And I'm sure that we will be given our fair share of opportunity. So, answering your first question, yes, there is overall buoyancy. The buoyancy is for good clients. The sales are happening with good clients, and we are practically there with all of us. And therefore, I said we do see a very strong pipeline in the private sector. You see new clients, companies like Capel, Singapore coming into India. You see companies like Brookfield expanding their geographies. You look at Puravankara entering a big time into Pune. You see Lodha, who was earlier our client, though we are not executing a project at the moment. We have started receiving inquiries for them for Pune and Mumbai. So there is enough traction, as you rightly mentioned. However, a number cannot be attributed because we will continue to follow the philosophy of working with a client with a strong balance sheet. We do not want to burn our fingers like what happened post ILFS debacle, and we have learned our lessons. We do not want to fall in the same trap again, and therefore clients with strong balance sheet will be those with whom we will be working. That's the private sector. Government equally holds a large opportunity, as I've already mentioned. Thank you.
Thank you. Our next question is from the line of Avinash Verma, an individual investor. Please go ahead.
Yes, sir. I had one question. I just wanted to check what you mentioned on the rating change. So when is it likely to happen? When would you apply to the rating agency, you say?
So it will be applied. So the developments, as a practice, the company keeps giving them every month basis.
Okay.
So once the 100 crore temporary debt is raised, that will provide more than sufficient liquidity in the system. The rating agencies will be appraised. However, we see the rating being restored in Q1 after our full year financial results are published, and the rating agency takes up the re-rating exercise.
In the past, sir, generally the PAT margin has hovered around 6%.
Yeah.
And in the past Concall, you had said since you have a design and engineering portion in the MADA project, the chances of it going to 6.5–7%.
Yeah.
So can we expect that in the next financial year?
So I have always, the question has been on both two fronts, EBITDA and PAT. I have maintained that the company will continue to maintain its cash PAT level on the full year. Even if for the first 9 months, our cash PAT is at 9.63, and I hope that by March it should be close to the 10% mark which we have been projecting. Net profit could be 0.25% plus minus depending on the depreciation and the tax and the credit for deferred tax. Besides that, I do not see any change. So whatever projections we have given in the past hold true and will happen in the quarters to come.
All right, sir. Thank you, sir. All the best.
Thank you.
Thank you. Our next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi. Thanks for the opportunity. So the gross margin declined about more than 300 bits in this quarter. And given your comments on the cost pass-through to the customers, if you can just elaborate if there was any one-off or that was related to the CIDCO project, if you can just give some more clarification.
So the total raw material consumed in the quarter was 43.38 as against an average of 40.57. And the construction expenses was 27.99, all right, as against an average of 28.25. So overall, there was an increase in the direct expenditure by 2%, which transforms into 7 crore rupees or thereabouts. However, I clarified in an earlier question that the price variation in the government projects have been taken up to September of 2021 indices. The indices have substantially increased thereafter. Once they are published in January, February, we shall be claiming this escalation. So you will. So this is only a temporary shortfall of 7 crores. All right, or increase in the cost of consumption in the current quarter. For the full year, we expect this to remain at 40.5 to 41%, taking the EBITDA back to 18.5%, because the EBITDA stands at 16.8%, 2% reduction. Similarly, the increments which were announced in Q2 have been effected in Q3, thereby increasing the salary bill by 2.98 crores. So these are the only two parameters which have very temporarily reduced the EBITDA by likewise margin. You will see the correction in quarter 4. It will be back to the stable 17.8 to 18.5%.
Understood. That's very helpful. My second question is, what is the guidance for revenue for Q4, given this 40 crore is probably shifted into this quarter?
What is shifted?
The 40 crore.
Yeah, we lost 40 crores in the last quarter. It doesn't shift. You start the work and you complete as per the revised schedule, because we have received 16-month extension from CIDCO already. The first interim extension has been received. This was informed in the last conference call also.
Yes.
As far as our estimates for next financial year, that will be approved in the board meeting in first week of March and informed to all our investors by 10th or 11th project-wise. So top 15 projects account for 95 or 97% of our order book. So those will be informed around 10th or 12th of March, as I explained earlier also.
Sure. Okay. Thank you. All the best.
Thank you.
Thank you. Our next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Nirmal.
Yeah, hi. Good afternoon, sir. Thanks for taking my question. So two questions from my side. First, you said that private sector bid pipeline has improved significantly from December 21. So just wanted to get some idea about what are the kind of orders or segments which this includes. Is this largely residential real estate, or is this in other segments also? And the second one is, you mentioned that hospital pipeline continues to be strong both at central and state level. So what would be the quantum of, let's say, bid pipeline in the hospital segment?
So as far as Capacit'e is concerned, the bid life pipeline from hospitals is seen at 2,000 crores. It may be 2 lakh crore, but these are the projects which we are targeting. As I told you, one of the hospital projects is under final closure, and hopefully we should have that order in Q4 of the current fiscal, substantially big size. Decent size, I'm sorry, not big size, decent size. Apart from this, we see a lot of traction in the EPC segment in government as far as mixed use, which means residential and some portion of commercial is concerned, more of residential, affordable housing. In the private sector, we are seeing all segments do well. Retail is now looking up because bigger players like Truyas, along with the Canadian Pension Fund, or Blackstone with respective partners, whether in Pune, are investing substantially into the retail and hospitality segment also. So they are not looking at the current situation. Maybe their look ahead is over the next 2 to 3 years' time. However, yes, apart from this, we are executing the Commerce 3 for Oberoi, as you're aware, and that project is on extremely fast pace. I recommend that you visit that project site to believe what is happening at the site. So across all segments, the progress is very well as far as the traction is concerned. However, I would say surprisingly, none of us would have believed this maybe 14 months back or 15 months back. The residential segment is seeing a huge traction within the reputed developers, because the pre-sale components have surprisingly shot up like anything. You have seen record registrations, you have seen record sales number with many of our clients, which is a very heartening sign. However, we should be cautious over the next 3 to 4 quarters, and therefore we would like to stick with our existing clients, and new client will be only if they are as good or better than our existing clients. So yes, traction is very strong, and therefore we have given a guidance of 3,000 crores for the next financial year.
Thanks for the answers, and all the best for future.
Thank you.
Thank you. Our next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. Sir, for FY22 now, what kind of revenues do you think you will end at?
Sir, you just drop me a short mail and I will send you the details immediately.
Second, sir, when you were mentioning that the BG guarantee, the BG margin money will get released, so incrementally, where should the BG or the contingent liability that we have on our balance sheet
should move down to? So what is the contingent of the BG that we have today on the balance sheet? And does it mean that when we now incrementally expand or increase our top line, the BG requirements will come down, and to what extent the total BG or contingent liability should come down?
Sorry, but I think you have mixed two questions. Number one, BG margin is the percentage of FD to be kept with the bank against the outstanding bank guarantee utilized. So, for example, if we have utilized 700 crores of bank guarantee and the margin is 15%, so FDR of 90 crores has to be kept with the bank. Okay? What we have mentioned, the margin coming down is directly related to the rating of the company. And once we restore the rating to A in Q1, hopefully, the margins will fall by 5 to 10% across the bank guarantee and LC limits. All right? Now, this reduction will free the cash into the system for reduction of debt. This is what I meant. Second part of your question, which you mixed up, was that do we see our overall bank guarantee requirement coming down vis-a-vis what it was 2 years back? The answer is yes, because the performance guarantees, which used to be between 5 to 10, 15%, have come down to 3% in most government clients. Number one. Number two, even in private sector, we have seen reduction of 2.5% from 5% to 2.5%. Therefore, we believe the performance guarantee levels have come down. As far as advance is concerned, if you take a 10% advance, you will have to give 10% bank guarantee. That doesn't change. In government, again, the retention plus performance guarantee at most places has been restricted to 5%. All right? And therefore, the overall guarantee requirements will come down. If the guarantee requirements come down, the margin requirements additional will come down, thereby making additional money which would have otherwise gone into fixed deposits available for long-term working capital of the company.
Okay. And so my last one clarification is, so we could understand that the Bhada project SPV, whatever is your portion, will come to your revenue from next year.
Yeah.
When it comes to CIDCO project, will it be a JV accounting or again a portion of that revenue?
CIDCO is a standalone project, sir. It is on standalone financials of the company. There is no JV in that project.
So you mentioned 600 crore SPV execution in case of Bhada next year.
Yeah.
In CIDCO, what can be the execution number?
As I just mentioned, sir, by 10th our budget will be approved, and therefore we will forward you and whoever sends us a short mail the details of the revenue for the next financial year. Till such time the board approves the budget, please excuse me from commenting anything.
Thank you. We'll take a next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So just I have one question. Now in the last call, I think we were talking about execution level of maybe around 550 crores in the fourth quarter.
Yeah.
Now on the backdrop of this bank margins and liquidity, so any kind of change in that outlook that we had given earlier?
Yeah, I just mentioned that the quarter 4 projections numbers will be mailed over the next 2 to 3 days, so that the precise number can be known. And for the next financial year, it will be informed on 10th of March. You have rightly mentioned that we only ramped up our execution to the level the current cash flows and the limits could support. However, since there's a 100 crore release expected by this month, we do believe that the execution will be ramped up sooner than later, and you will start seeing the difference from February end onwards in the current quarter as well as the ensuing quarters.
Okay. Understood. Okay, yeah, that's it.
Thank you. Our next question is from the line of Avinash Verma, an individual investor. Please go ahead.
If you could just repeat on the 1859 crore order which you mentioned, I just missed it. What was it? Was it the order coming through in the current year, which is expected, or what was it?
Yeah, the orders are expected in the current financial year, before March 31st, 2022.
Okay. So up to for the 9 months, what is the orders we have got? It's close to 450 crores, is it?
680 crores approximately.
680 crores.
Yeah.
All right. Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the floor back to Mr. Viral Shah from Yes Securities. Over to you, sir.
Yeah, we thank the management for giving us an opportunity to host the call. Rohit sir, any closing comments from your end?
Thank you for participating in the call. We hope we were able to address your concerns, if any. If you require any additional information, please contact SGA, our investor relations advisor. Thank you very much and see you next quarter. Thank you.
Thank you so much, sir. Bye-bye.
Bye.
Thank you. On behalf of Yes Securities, that concludes this conference. Thank you for joining us, and you may now disconnect.